Have you ever wondered when is the best time to buy Tesla stock when there's news of a split? Should you buy now, before, during, or after the split? Make sure to stay tuned and keep watching to answer that question. After Amazon, Tesla too is pushing for a stock split. While it is yet to be approved, it caused investment enthusiasts to wonder whether or not to buy Tesla stock. Tesla stock is such a hot topic now since a lot of people see it as a good retirement plan. In today's video, you will find out why you should not be too late buying Tesla stock. It can be noted that in March, Tesla announced a proposed stock split that could go into effect later this year. The EV company hasn't announced details of a stock split yet, but it's likely to put the final authorization of a split to a vote by shareholders in June. Tesla began trading on the NASDAQ stock market in 2010 and is led by Elon Musk, who has been CEO since 2008. Musk has been a controversial figure over the years because of his tweets influencing the stock market, his plans for Tesla, or his investments outside of his Tesla role. Tesla's share price was around $700 for one share a year ago in 2021, compared with around $875 in April 2022, although it is back to the $700 range today. So, if you bought $1,000 worth of Tesla a year ago, which would have been a little more than one share, that position would be worth around $1,250 today. But what would $1,000 be worth today if you had bought Tesla stock at the beginning? The company went public on June 29, 2010 at $17 a share. That would be a $5.16% adjusted for the company's stock splits over the years. If you bought $1,000 of shares on the day of Tesla's initial public offering, IPO, those shares would have been worth around $169,000 today. When a company splits its outstanding shares owned by shareholders, it leaves the shareholder with the same amount of money invested in the company, but more shares in their portfolio. If you owned $1,000 of Tesla stock before the split, for example, you're still going to own $1,000 of stock right after the split. The number of shares, however, will change. If the past is any indication, a 5-for-1 split would mean you would still have $1,000, but you would own 5 shares for every 1 share you had before the split. So why did Tesla decide to split its shares if the amount of money invested by its shareholders is the same? One reason may be the cost of a single share. One share of Tesla closed at $1,065.10 on March 28th, the day the split was announced. A price like that for just one share could be too high for the average investor, so splitting the stock could make it more attractive and more affordable to potential new investors. Another reason to split a stock may be to help with liquidity. Tesla could create a larger number of shares without having to change the valuation of the company. Increasing the number of shares means the company might also increase its liquidity, which is its ability to convert its stocks into cash. A stock split announcement could also give a bump to the price of a share. In Tesla's case, it did see a rise in its stock price in the initial days after the announcement. A company can still split its stock if it thinks shares have become too expensive, preventing the average investor from buying them. By splitting the stock, existing investors will hold more shares, but at a lower price per share. It's common to split stock 2-for-1, meaning that each shareholder gets 2 shares for every 1 they currently own, and each new share is worth half of what the old ones were worth. Note that the value of each investor's position doesn't change. Tesla plans to split their stock 3-for-1. However, news in early April that CEO Musk was trying to buy Twitter may have dampened enthusiasm for the stock. Reports suggest that his $44 billion offer for Twitter may include the need to use $12.5 billion in Tesla shares for acquiring a loan to complete the transaction. Here comes the big question. Should you buy the stock before or after the split? Of course, it's impossible to say what Tesla stock will do immediately before or after the stock splits. It is safe to say, however, that since the split has been announced, most of the impact of the split has been largely baked in to the current trading price. In other words, investors in the know are basing their purchases and sales of Tesla stock with the split in mind. Some experts predict Tesla stock price to soar after the split, so it might just be a good idea to buy before or during the split. There are some quite high price predictions for the company's stock. Of course, that is not to say that said predictions are accurate, especially when it's currently sitting at the $700 range when valuations are around $1,000. Still, there is a chance that the economy will be a bit better after the split, so a high stock price will be possible then. Would you buy Tesla stock before, during, or after the split? Share your thoughts in the comment section below. Tesla began turning a bottom-line profit in 2020, so investors can value the stock with the price-to-earnings PE ratio. Its PE ratio started high when it first turned profitable. Earnings per share (EPS) are now quickly growing, and the stock's valuation is coming down. The current PE of 89 is its lowest on record. Tesla still commands a considerable premium over legacy automotive companies like Ford and General Motors, which trade at a PE of 4 and 5, respectively. However, Tesla's bottom line is swelling. Analysts expect 30% annual EPS growth over the next 3 to 5 years, compared to just 3% for Ford and 10% for General Motors. It seems that Tesla deserves the premium valuation it has, though the degree of that premium is up for debate. Nevertheless, if the company can grow like analysts believe it can, long-term investors could see the stock grow into its valuation over time. The outlook for Tesla over the long term appears to be positive, according to most analysts. Even if the company's growth trajectory continues on an upward trend, however, it's unlikely to see the amount of growth the company has experienced in the last 2 to 3 years. This is true of most companies, particularly those in the technology sector. They grow rapidly at first, but then growth slows down as more competitors enter the market. But slower growth is still growth, and analysts seem to agree that Tesla remains well positioned to continue to grow over the long term. Investors should be prepared for some bumps along the way, however, if the company's history is any indication. Tesla's growth has been robust, that's for sure, but it hasn't been immune from the market pullback in recent months, and the back and forth between Elon Musk and Twitter has made the stock even more volatile than usual. Still, the electric car maker appears to be here to stay, and Tesla has been a leader in the technology required to make electric vehicles viable. A stock split can grab headlines, but investors who buy Tesla stock should do so because of its growth and profitability. The stock could go lower over the short term, and nobody knows when a bottom might occur. Approaching your investments with a long time horizon will give a company's fundamentals the best chance to dictate your investment returns. Good companies tend to perform well over time. You can also use a dollar cost averaging strategy to slowly buy shares, blending your cost into the average that isn't too high or too low. Before you buy Tesla stock, do some research on the company and decide whether it would be a good fit in your portfolio. If you do decide to go forward, look into some of the best brokerage accounts that can help you best manage your investments. If you're investing in Tesla because you believe in electric power, you should know there are other ways to invest in renewable energy. And remember that with all stock market investments, you are taking a risk and stocks could rise and fall depending on several market factors. That said, it is important that you conduct a thorough study of the stock as well as observe the stock market movement. You might also take into consideration experts' advice as they have spent time studying before giving their opinion about a stock. Visit our channel and watch our other videos for more Tesla stock content.